minute remaining for both sessions. You will see the sign 1 minute left. I will say time when the time is up, all presentation and Q&A when we stop. You will have another 5 minutes for further comments and recommendations from the judge, if there is any. Now, let me introduce our esteemed judge for today. The first one is Kun Warat Tharamat, Senior Equity Research Associate Kasikorn Securities. And second is Kun Bo Puruwanit, Global Market Sales, UBS. And the third one is Kun Duladet, Big Senior Analyst, BBS Victor Securities. And the fourth one is Kun Amon Sombun, Extreme Capital, Head of Investment and Business Development. You may begin your presentation when you are ready. The timer will start when you start presenting. Wait a minute.
Thank you very much. So, we'll be starting. Why go local when we can go global? Ladies and gentlemen, we recommend you a buy on Global House at a 22.5 upside at the target price of 19.6. And this is due to 1. Rapid store expansion in Thailand, and 2. Increasing gross profit margin from in-house brands, and 3. Cost reduction from ESG policies and the benefits from the government stimulus benefits. Next.
Now, in terms of rapid store expansions, as you can see, Global House has a large concentration within the upcountry regions, primarily within Tier 1 cities. However, with expansion plans moving forward, they aim to reach 101 stores by 2025, with focuses towards Tier 2 and Tier 3 cities with lower land costs. Ultimately, Global House will receive a shorter payback period and improvements to the free cash flow, increasing the bottom line. Next slide.
We believe that Global House gross profit margin will increase due to the increase in-house brand to 30% by 2027, supported by the direct sourcing and the low AP days supporting lower supply costs. And this will overall lead to a gross profit margin increase to 26.7 by the end of 2025. Next.
Now, in terms of effective cost reduction, Global House primarily focuses in the ESG policies, primarily the E pillar. Most notably, the complete solar roof implementation, reducing around 350 million baht per year and expected to reoccur annually. Second is technology implementation in the form of ASRS inventory management, optimizing operational efficiency while cutting back energy and labor costs. Subsequently, you can see the SG&A has decreased, indicating expense cuts, while the net profit margin has increased. Next slide, please.
Global House will benefit from the government stimulus policy, 4 of the most important being 10,000 baht digital wallet, farmers' debt suspension, and the decrease in interest rate on loans, as well as the increase in salaries and minimum wage. And this will lead to an increase in purchasing power by at least 500 billion baht, supporting customers to improve Global House sales. Next.
Let's take a look at the company. The company started in Royal Province, and right now they have 84 stores in Thailand. We believe that they will continue to grow up to 101 stores by 2025. And right now, in terms of the product, they basically sell building materials and home decorations. Over 200,000 products. In terms of the company structures, as you can see, Global House also have operating in other countries, for example, Laos and Myanmar. But however, we do not expect the contribution from the international shareholdings will be any significant anytime soon.
As for the industry overview, you can see in Thailand, the consumer confidence index has been rising in 2023. And as for the farmers' income index, you can see that it has rebounded in the third quarter of 2023. This is important due to the high correlation with Global House revenue growth. Next. And the increase in the condo transfer to foreigners, as well as the expected growth in the furniture sales, appliances sales, and the annual real estate transaction will be a benefit for Global House as a dominant player due to higher demand and higher investment from Thailand and neighboring countries. As for the regional, you can see that the urbanization and changing lifestyles will support the RCN home improvement industry to grow in 2023 towards 2027. Next. As you can see, that Global House have a competitive advantage among its peers. Here you can see that for Home Pro, Global House have a lower SG&A, while compared to Do Home, Global House has a much larger net profit margin. And it also have 2 times the number of products compared to Thai Wasadu, while being cost competitive compared to Bud and Beyond. And all of this is translated into the Porter 5 analysis, where Global House have a competitive advantage compared to its industry average. Next.
Right. Let's dive into the financial analysis. As you can see from the upper left, the net sales slightly decreased. This is due to the lower SSSG and the decrease in steel price in 2023. However, we expect the net sales to grow up by 10% as we could see an increase in revenue from store expansion as well as government policies that will enhance higher consumer spending. Now moving over here, we believe that the cost of goods sold as a percentage of sales will improve due to the lower supply cost and increased product mix from in-house brand. Combination with these two factors, we believe that the gross profit margin of the company will improve moving forward. All of this combined with the lowering SG&A supported by ESG policy and ESRS system will be an improvement in overall net profit margin to the company. Moving on to the balance sheet, we observe a significant improvement in the ratio as you can see from the graph over here. Therefore, the lower gearing together with good relationship with the banks and the lower borrowing cost in the market would allow the company to have more room to borrow in order to fund their further expansion projects. Now, looking at the AP days at the top, we can see that AP day is low. This is their strategy to achieve cost competitiveness by sourcing supplies with better terms. Now, at the bottom, we can see that inventory days seem to be elevated. This is due to the large import from China. However, we strongly believe that the inventory days is going to improve because of the industry-leading inventory management system. And I would like to mention that the imported supplies are converted into in-house brand, which contribute to higher profit margin to the company. Next, please.
As for the valuation, we have concluded the target price to be at 19.6 with an upside of 22.5%, and this is derived from the DCF model where we forecasted the 2024 growth rate to be at 10%, which is the rebound from 2023 growth rate of -4%. And this is smoothed out into the terminal growth rate of 2.75%. As for the reduction in cost of goods sold, this is contributed by the in-house brands and the sourcing strategy, while for the SG&A SG&A reduction, this is supported by the ESG policy. As you can see here for the WACC, it is at 7.29% as computed according to the table below. Moving on.
Right. While evaluating the relative valuation, in terms of the PE, we found that the PE indicating the price of global to be relatively expensive. However, looking at the PB, it indicated the price of global to be relatively cheap. Therefore, we also look at the PB band and the PE band. As you can see, both of these graphs indicate that the price of the stock is trading below the long-term average, indicating room for growth coinciding with our DCF model. Next, please.
Here are the key investment risks. Firstly, for the government stimulus execution, if delayed, will be mitigated by other incentives and the store expansion from global. And as for the El Nino effect on the farm's income, it will be supported by the social initiatives to support farmers' income. And as for the household debt, the government initiatives to lower the national debt level will support. And for the steel price volatility, Global House Risk Management Committee will have deviated this risk. As for the migration into the major cities, Global House social programs will promote loyalty among the local community. Moving forward, we have performed a scenario and sensitivity analysis according to the 5 key risks and how it's impacted the target price. As for the government stimulus execution, we're expecting all the policies to go through except for the 10,000 baht digital wallet. As for the El Nino effect, we expect an impact of 23% decline on the farm income, while for the household debt, we're expecting improvement from 90% to 88.5%. And as for the steel price, we expect it to remain stable and normalized, while for the migration, we still believe that there will be more migration moving into the Tier 1 city. And this is used to compute the best and worst case, which is overall translated into the risk measures where the government stimulus execution, El Nino effect, and the household debts are considered the highest risk. Moving on.
Now, ESG is not about being green, it's about being profitable. And in order to do so, it's through authentic ESG policies which contribute to increased revenue, cost reduction, and protection against downside and reputational risk. While evaluating the ESG policies for Global House, we find that the E is attributed to cost reduction, most notably the solar roof implementation, reducing electricity costs by around 350 million baht per every year and expected to reoccur. And in terms of the S, this is attributed to revenue growth and brand reputation. It is notable that Global House are industry leaders with a percentile score of 89.6, attributed to their local developments, which help increase brand reputation as well as sales channels. In terms of the G, which is attributed to risk management and brand reputation, they have received a 5 out of 5 by IOD for their corporate governance excellency. Next slide, please. Here we have broken down the ESG policies into revenue growth, cost reduction, risk management, and reputation improvement. We believe that a 1% increase to revenue will increase the target price by 32 satang and EPS by 8 satang. And in terms of cost reduction, a 1% decrease will increase the target price by 5 satang and EPS by 6 satang. Now for risk management and reputation improvement, despite having immeasurable targets, we believe that this acts as an insurance for potential downside risk. Next slide, please.
Last but not least, we strongly believe that these 4 key drivers will support our recommendation for a buy at a target price of 19.6 baht with a 22.5 upside. Thank you very much.
Thank you.
Next is Q&A session.
Can you explain a bit more the store expansion to the tier 2 and tier 3 cities, including you mentioned about a shorter payback period?
This is due to the company visit that we had, and the company has told that they're initiating to expand their stores toward the tier 2 and tier 3 due to the lower cost of land, and this will help them reduce the payback period. Yep.
So how much is in general comparing to tier 1 city and tier 2?
So tier 1 cities offer around a 7-year payback period, while the tier 2 and tier 3 cities offer a 5-year payback period.
You mentioned about the superior gross profit margin to CPX. Could you please explain how Global will achieve that?
Compared to third-party products, the Global House is moving towards expanding their in-house brands, which have a generally lower cost compared to the third-party products, and this will increase the gross profit margin.
What is the net profit projection in 24 versus 23?
Can you go back to the slides for the back? Back. No. Yep. So here you can see that the net profit margin for 2024 is at 9.9%, and this is a rebound from the 2023, as we have mentioned before, due to the lower sales prices and as well as the lower SSG growth, and we expect it to rebound in the 2024. Yep.
And I know that what is the absolute numbers of net profit you project in 24 versus 23? You just showed the net margin, right? I just want to know the absolute net profit in Thai baht. Your projection.
Yes, for that, we believe that we do have it in the TCF model, but however, as we do not have it here, I don't think that we can be able to provide you with the exact number. However, we can provide you with the percentage of net profit margin compared to the percentages, compared to the sales.
So are you sure you cannot give us the net profit numbers? Since you already have net margin, you already have sales, you don't have net profit.
Yes, we do, but right off the bat, I don't think that we can come up with and remember the number for the net profit in comparison to the sales.
Okay, that's fine. So back to your valuation, what is your rationale of 10% sales growth in 24?
Yes, if you look at the sales growth for 10%, it is from the base of a negative 4% from 2023, and we expect that with such a low base, we expect the rebound to be larger at 10% in 2024, which is supported also by the government stimulus and also the increasing in-house brands products as well.
And what is the margin difference between in-house versus the other brands? The gross profit margin differences.
For that, we don't have the exact number, but we expect that it would be around 30%. We expect it to be around 30%, and we computed it accordingly into our FCFF model.
30% difference in gross profit margin?
not gross profit margin in terms of like cost compared to the products that are from the third party companies. Yes.
Okay, and back to your valuation, I just saw you show the cost of equity of 7%, right? Yeah, 7%, 8%. How do you get that? Do you think that 8% is too low?
For the cost of equity?
Yeah.
Yes. We do not think that is low because according to the table, as you can see, we computed the cost of debt to be at 2.5 according to our computation of the interest bearing compared to the interest expense. However, due to the expectation that the interest rate will increase in the near future, we adjusted it accordingly to the 2.5% from the computation that we get of around 1.9. And also for the risk-free rate, we looked into the 5-year past average of the Thai bond as it coincides with our FCFF model as we forecasted for the 5 years. And as for the tax rate, we looked at the most recent 9-month 2023 tax rate.
I'm asking how do you get that cost of equity of 8%, not the cost of debt? I'm
Yes.
asking about cost of equity.
Yes, this cost of equity is computed accordingly to the cost of debt, the cost of equity, the weight of debt, the weight of equity, and as well as the risk-free rate and the beta and the estimated return of the market yield.
On this table, right? 10% sales growth in 2024.
Yes.
Referring to another slide that you talked about the risk factors. The
Yes.
two main ones being government stimulus. So no digital wallet, right? You're basically
Yes.
assuming no digital wallet
Yes.
and 23% farm income reduction.
Yes.
Right? These are, I think, quite bearish assumptions. So how did you derive the 10% growth in 2024? It seems to me a little bit disconnect. So can you elaborate a little bit more on 10%?
Yes, so if you look at the government stimulus execution, we're expecting still from the growth, except for excluding the 10% digital wallet. But as you can see, for the 23% decline, we computed according to the number of stores that Google has in the North and Northeastern region, which will be impacted from the El Nino effect, and we referred it to the impact back in 2016. And with this, combined with these two, we have assumed that from the negative 4% growth, we're expecting around 14% difference. And yes, according to this, we have averaged it out from the government stimulus execution as well as the El Nino effect to come up with the 10%.
Who is the customer of Global?
Currently, if we're being realistic, then because due to the majority of the stores with over 60% in the North and Northeastern region, we do expect that most of the impact will be from the farmers' income, considering the low and mid income individuals. However, we do know that Global House has indicated interest in expanding their market share into more ranges of income individuals. Yes.
Given the government stimulus, there's one key element on the increasing of the wages, right?
Yes.
How would that affect the
For the government stimulus execution as the increase in wages. We believe that the increase in wages and the salaries of the government workers, which are considered in the low and mid income, will support the growth of Global House sales, as we have mentioned before, that currently their majority of the market is depending on the low and mid income individuals.
That's what the way of creating that. How did you come up with the way that we use? I think it's around 80.
So for the weight of debt, we looked into the market amount of debt. However, we couldn't find that information, so we utilized the book value of the amount of debt. And for the equity, we looked at the market amount of equity at that date of 16 January 2024.
I mean, your capital structure.
Yes.
Yes.
Can you explain a bit more when you're comparing the PE multiple and PB multiple? I heard you mention that
Yeah.
PE is expensive, but PB is cheap.
As you can see, if you can look into the PV, for PE, Global House is trading at a more expensive rate compared to HomePro, while it is trading at a cheaper rate in terms of PBV. And we believe that this gives mixed feelings, and we believe that this decreases the accuracy and relevancy. So we look into the PBV and PE band, which give consistent outcome of the stock price trading at a cheaper price from the average that we have computed from the last 10 years. Average.
So you try to imply that you believe in PB rather than PE.
No, as you can see that we have included both PB and PE. And if you see that this is the actual price that has been trading, and if you can see the band, it is actually trading at the -1 SD, which indicate